and mix, your brands, some very high level kind of financial parameters, just to get a sense of the company and the platform that you guys are already operating and offering.
Okay, perfect. So I mean, I'll start and then Richard will just add in. So basically, we built this business, what I like to say, brick by brick, customer by customer, and it's done it over 2 decades, and it's all been built out of return on marketing. And obviously, it started with Spin. It's made up of two distinct offerings. You've got Betway, which is the online sports betting, one brand across the globe, and Spin, which is our multi-brand casino offering. And we've done this across the globe, but we've done them together. And this business is built out of understanding what the customers' journeys are through each of the markets that we operate in. And we've done that by reinvesting this money over 2 decades. So what you see today in the Super Group is not an amalgamation of lots of businesses together. It's businesses that we have worked from the customers all the way up to get the revenues, which is here north of last year north of $1.5 billion. And the business has been built on return on marketing. It's that in order to do that, you had to understand each of the journeys and what the customers are doing in each market. So the idea is that you've got a global marketplace made up of all these different countries, and we then got localized the product in each of these markets. And today I would say the Betway brand is across the world opening more markets as a brand than any of our competitors. So we've gone with a single sports brand. And the reason we've gone for a multi-brand casino offering is in casino, it's really different. It's all about genres, luck, feel that the customer thinks is getting out of the casino. So we've got like 20 brands, of which 4 or 5 make up 80% of our revenues there. And this is a global business with country heads, teams, as you said, across the globe. And this is not about market share in any market. It's about revenue in every market, and that extra revenue bringing down profitability to the Super Group.
Neil, so one more foundational question, but just as we think about the buildup of these brands, we've seen some of the major European operators, the Entains, and Flutters have built through a lot of acquisition. Was the same true of the foundational piece of Super Group, or were these more independently jump-started opportunities that you saw and fed along the way?
So yes, so these were jump-started. They were effectively Spin Palace, etc., and all the different brands were run independently, but ultimately they all together make up what you see today. So it's not a corporate financing deal. This is about return on investment. We use the same back office services. We've integrated, so we fully integrated. And in 2011, we found Betway, which happened to be on a similar platform that our casinos were on, and we thought we would turn it into a casino. But what happened was it was all about in-play betting, and that's how we got into sports, and realizing that this in-play betting in sports has made a sports book very similar to a casino, to a slot machine. And then from that, we built up the technology and to make up what you get today in the Super Group. But this is not corporate finance of hundreds of companies coming together. This is return on marketing expenses in these casinos and then ultimately in Betway.
This is super interesting, and there's, I think, a lot of directions we can take the background. One I want to dig in on to start there is, I think, just to make sure we're clear on the mix, I believe about half the business on a revenue basis runs through the Betway brand, and about half runs through the the Spin brands, which is this portfolio of online betting. So am I right there? And can you help us break down, Betway? Because like you said, I thought it was pretty fascinating. It seems like you thought it would be a casino-led brand, and then you've ended up, developing a real expertise in sports. I'm a big EPL person, so when I see the West Ham shirts now, it's I see your advertisements everywhere. So help us, think through that.
So in a sports book, you obviously have online casino as well, right? So what we found is a sports player who bets at the casino of Betway is a fundamentally different customer to someone who comes in on the Spin brand. A Spin brands are people looking for online casino only. They're not interested in sports. So what you've got to do is you've got to offer both these genres to capture the whole market, and that's why we've got it. And then within Spin, as I said, it's the same as the Las Vegas Strip, is they've got lots of casinos, but they all ultimately offer the same thing, but in a different genre, a different way, a different messaging, but it's still an online casino. And then what you do is you open these into the different markets across the globe, and that's how you then get more revenues into your ecosystem. So our whole point has been is understanding the markets we're operating, localizing the product. So your Betway will obviously have casino in it, but it's mainly driven by sports customers coming in from sports. But then the casinos are all casino driven, and some might be slot players, some might be roulette players, and all the different products that we offered within the casino. But that's all we are. We are a casino in spin or a sports betting led in Betway. But the difference with Betway is we can globally spend. We spend on one brand globally. If it's the EPL, the NBA, Richard can go for some other ones that we do in esports, etc. But it's one brand spend for the globe. And that's the difference. So by the time you open in a market, they've already seen you on the EPLs, the NBAs, etc. But the corollary of that is, and this is very important, we wouldn't take our whole marketing budget and just spend it on Betway brand. That also wouldn't be right. We spend a portion of the marketing budget on the Betway brand, and then obviously all the other different TV and PPC, etc., affiliates, etc. And then we combine that with spin, so we've got a great mix of our marketing across the globe.
A couple of other dimensions to dig in. I don't want to go too far down this rabbit hole, but I am curious, right? When we did some quick math, we get a sense that your average revenue on a monthly basis per user, looks like you're over $150. I mean, these are the types of numbers. So kind of high level question is, are we in the general ballpark there? And then if so, that would seemingly be a nice mix between, I think, what we've seen in the US so far with sports betting definitely being south of that, and then casino actually being materially north of that. So is that the right way to think about it? That you're sort of a blend of of these two product lines? Is it that simple, or did I miss something pretty fundamental on that?
Richard, you want to start? I'll let Richard. You can start.
Yeah, fine. So Sean, I'll take that. I think to the point that Neil made earlier around the customization and kind of the localization in each market, depending which market we're talking about, you're going to have a very different customer. You're going to be looking at different customer values, depending on the stage of maturity of the market, depending on if it's a Betway-led market or a spin-led market. We don't look at it per se on a kind of one-size-fits-all number across. We look at it on a very localized basis, and having the teams in each of these markets effectively, they're understanding the customers in each of these markets and looking at it on a revenue by market.
Yes, but so that's your blended rate that you took, was taking the revenue divided by the average customer in a month. Yes, but obviously the secrets in these businesses, each one is, you happy to have a revenue of $10 a play in one market if it's only costing you $1 or $2 to acquire them. So it's all relative. This business is really simple. If you cut through everything, it's all about the cost per acquisition and the lifetime value. So you can have the greatest marketing team bringing them in at a low price, but if you haven't got the retention systems in the system, they're coming in the front door and leaving out the back door as quickly as they're coming in. So our business has always been about both, is enhancing this retention, understanding when to give bonus money, understanding what the customer wants at each time. But remember, when you do on a global basis, it becomes harder because you have to do that in every market and get the product localized in every market. And that's what we obsess about. So when we started talking about this earlier on, I said it's all about this obsessing about the customer. That is what this business is about. It's a return on marketing spend that culminates in your retention values per market. So we've got a range of them in each market. Obviously, we don't publish what it is per market, but because that's our competitive advantage. But then we know where we're working, where it's not working, where we need to change it, what's happening, why are they falling off the funnel in certain markets, what's doing well in others. But we've got the uniqueness is that by having this Betway brand, we can see it, the same brand on same software in all different markets where the pressure points are.
As investors are getting to know new operators, a critical question I think that comes up pretty early in the conversation is, who either provides or who do you work with on the technology front? So can you help us walk through your technology stack a little bit? What are the pieces that you own that are proprietary? Any key partners that are on the external side, that you work with, either on an exclusive or partially exclusive basis? Yeah, how do you do your player account management, your trading and risk, of course, your betting engine?
So Sean, I'll take that. On the technology, we have very much a hybrid approach. So we have proprietary technology that we've built, and then we also license technology in from third parties. One of the key differences here on the technology, regardless of if it's proprietary or licensed in, is that we control that technology in all the material markets that we operate in. In terms of what we license in, that's licensed on an exclusive basis from Apricot. That's a long-term agreement. It's exclusive on the sportsbook and effectively on the PAM, the player account management system. Other than us, they have one other small customer in the UK, and other than that, it's fully exclusive to us. And then, of course, on the proprietary technology, we've built that in-house and use that in a number of other markets. In terms of what we license, we are very much in control of that roadmap, given the exclusive nature of the agreement. And what that does, going to what Neil said earlier about understanding the customers, that gets us a lot closer to our customers. It enables us to ensure that what is being developed is what we're after. We can control the prioritization. We can control which markets are being rolled out. We can control which features are being rolled out in each of those markets. And that's very different as if we compare that, say, to being a customer of a provider that has many customers in a market. So we have the comfort that what is being developed exclusively for us, as opposed to being rolled out to all of our competitors at the same time. And when we look at a market from a technology perspective, we're looking at A, speed to market, and B, having the most fit for purpose, the most localized product that we can in each of these markets. And regardless of if we're using our proprietary technology or what we've licensed in from Apricot, what is a non-negotiable in the business, and this is going back to what Neil said, from day one, is overlaying this technology with our behavioral science, our data analytics engine, and that, again, proprietary technology that's been built over time, and that enables us to fully understand our customers in depth. It's enabling us to absorb this data in real time. It's enabling us to understand our customers, and very importantly, it's enabling us to understand where to invest the next marketing dollar. So we understand what's effective, what's not effective. Should we be scaling back? Should we be investing more into certain channels? Effectively giving us a perfect view of all of our customers across all these markets at all times. So very much, say, a hybrid approach, but one that is underpinned and supported by data across all these markets.
I don't want to go too far down this rabbit hole, but obviously I'm intrigued a little bit when I was looking through the background of the company. It does look like on the cost side there's a material amount in your in your cost structure for royalties, which I think are licensing that you guys are going out for. I think it's largely for games. But am I right on that? And is that some of the proprietary is there something proprietary in the content side that you guys are able to source in that also gives you a different relationship with the customer, differentiates you when you're kind of out in that sea of of other competitors that is unique to Supergroup?
Listen, I think if you take online casinos, it's all about content. It's all about the games. But again, you can have all the games. It's about what you offer the customers in each market. If they're slot players, what genre of games? And that's where all the technology comes. Like, for example, if you play a certain genre of a slot game, we should be giving you offers on those kind of games. Now, what we've done, and also they're best-selling games in each market, so those are the content we have to happen. But sometimes your most expensive games aren't necessarily your best performers, but you need to have them on your shelf for your customers who enjoy them. So this has been a process for us over time, but we don't make our own games. We have been purely focused on this customer journey and acquiring and retaining. So our big thing, especially in casinos, has always been this bonusing. The difference between GGR, gross gaming revenue, and net gaming revenue is bonus money. So most countries in regulated markets tax you on GGR, but you can be giving away free money. Not only is it affecting the odds, you're paying tax on that. You've given away to your customer and you charge tax. So we've been obsessed about NGR since day one. But having said that, you can't give no bonusing, but then you can't give too much bonusing because it changes the odds. And in sports books, it also happens, and then you get the syndicates coming in. So all of that has been this obsession with this GGR to NGR balance, and then this obsession of the product being near the customer and serving the customer in each market. And at different stages of the maturity of the product in each market, the product will then be at different levels depending on the investment that we've put into the product in those markets. And that's been the challenge, but that's 20 years later is what we're able to now deliver lots of markets and get more features into each. But there's not one silver bullet. Doesn't mean because I make one game. They might think my game's nice, but that might be one game, you know? So yes, we'll get certain exclusive games that we'll get first, etc., from some of our suppliers, but it's more about how you serve those games to the customers and the offerings you give them on those games.
I think you're sort of uniquely qualified, given 20 years of experience and the number of markets you operate in, to answer what I'm about to ask, which is, if bonusing is so critical, right? If this is such a critical component of true profitability relative to a lot of revenue and, like you said, a lot of cost attached to it, I think many of us are now very focused on this with New York legalizing recently, because we've seen maybe some mistakes here. But the question is there a natural rate that you see that spread tending to over time? So, we hear numbers between 20 and 30% as kind of stabilized bonusing, or that spread between NGR and GGR. Does that sound right to you? And what's the curve? Right. What's the curve?
No, that sounds right, but also it depends on the market. But also, it's also as a percentage of deposits, right? It's like when you're giving $3,000 free, I mean, that's too much. I mean, it's ultimately over time, what happens is you're giving the edge to the customer, and then you can have bonus abuse. So we've always been about getting that ratio right, but in some markets might be slightly higher than others. But over time, you can't run a business at bonus money being like 40, 50%. It's the ecosystem doesn't work. The time you pay your taxes, time you pay all your processing costs. Remember, these are on the numbers pre that, right? And then your marketing, so we found it. We've tried, we experiment in different markets. We do different bonusing. We do dynamic bonusing. It means in real time. So it's not just sign up, get this bonus. So it's playing with all these metrics, and it's not one size fits all, but it's definitely not just, if I give away free money, I'm going to build a profitable sports betting and an online casino business. And I think all the European operators have been around us a really long time, have seen that, and you can gain market share, but ultimately over time, is your product, are you retaining them? As I said, in a start of you can come in the front door very easily. The question is how quickly you go out the back door. and I think the difference is because when we started these businesses, we had to make the first dollar of marketing work. So think about it, when you started these businesses, they weren't start with hundreds of millions, they start with a few $1 million. So when you invested in marketing, you had to make sure that marketing would work. And again, new markets come, and that's the key in these markets that are now regulating and new products. You can't just go and spend all your marketing on day one in the market, because your product, maybe your regulated product hasn't been tested. Maybe there's something wrong in it. Maybe there's a fall off. Maybe a payment process has gone wrong. You've got to get them right. So this has been 20 years of building this, and as I said, customer by customer. And if we didn't know what we're doing, then we wouldn't have this revenue and this EBITDA, because this has been built out of marketing.
So another thing thank you, Neil, because I think this is a really important discussion for for people that are trying to understand a new business journey that's very in that early stage of its life cycle. Like you said, cost of capital or the marketing or the dollars available to capitalize these businesses early on may have been very different from what you experienced 15 or 20 years ago. So I think this is fascinating. But one other thing that really differentiates Super Group is, of course, your geographic mix, which I think is highly unique. So could you help us break down or frame, we framed it one direction, which is product suite, Betway and Spin. Help us the other direction. What's your geographic mix? How do you break down across, the country, and what are the key, what are your key end markets, relative to, kind of the globe?
Rich, you want to go for it?
Yeah, sure. So Sean, I think, as we said earlier, today the business is licensed in 25 different jurisdictions, meaning that we have a very globally diversified revenue mix. Within that, you may have seen in some previous presentations, so the Americas, which excludes the US, that's a significant part of the business. Majority of that is coming from Canada. But outside of that, a very, very strong business across multiple continents. We haven't split it out by country per se, but a diversified revenue mix, and across all these markets, space to grow. So it's not like in these markets we are sitting with 70-80% market share, or we're the biggest operator in any one of these markets. We're diversified across all these markets, and as we continue to localize the product, it's finding ways, how do we grow the revenue in each of these markets, and as we continue to grow the pie, continuing to diversify that revenue mix even more.
Great. Richard, probably the biggest area and the one country you did call out was Canada. So I'd love to go, a little deeper there, right? This is a market that's super top of mind for investors, given that I think we know it's going to go, legal in Ontario in, less than a month's time. I think what people do not, not everyone that's probably in this conversation does appreciate is how important this market is, to Supergroup, and how big you really become there, which I myself was actually, pretty surprised to learn. So can you just start at the high level? How did you build up, your expertise there? Why did this end up being, a market that you have, iterated on and really become so successful in? And then we'll kind of dig a layer deeper on what legalization means for you.
So I suppose Canada's been a market that's been open for 20 years, an unregulated market for 20 years, and now only Ontario, one province, is regulating.
Right.
So by its very nature, understanding the marketing and understanding the customers and the retention rates is what we've been able to build up in Canada over the last 2 decades. And as you've seen in other markets across the world, the UK then regulated, Australia regulated, all of them, Spain, etc. So Canada's probably one of the last ones, which is effectively why Ontario is coming. So Ontario makes up one portion of the total Canadian business. And in these markets, everyone talks about market share. The truth is no one knows what the market share is, because no one knows what the size of the market really is. Right. And that's why we've never been obsessed about market share. It's all about, can we get extra revenue? Because in a highly operating leverage business, it's all about extra revenue, and it's about the profits on those extra revenues. And that's why these businesses, as they grow, as long as you're not spending mad amounts on marketing, overspending on marketing everywhere, you get this huge operating leverage. So Canada's one country, but then the other markets, so for example, we'll be in Africa. We'll be in lots of countries in Africa, but remember, we got one brand in Africa, and that's Betway. We got one brand in the UK sports betting, it's Betway. So when you get this brand spend, you've already, people know you, then you can localize it with the localized targeting, if it's TV, PPC, etc. And then our spin brands have been in Canada and the other markets, and they've obviously, because we know what we're doing with the customers, it's understanding, keeping those customers engaged with us, and that's the business, and that's how the business has effectively grown.
Sorry, Richard. So what's the journey here? What happens on April 4th? Are you licensed to go in, and is that your plan to go in into Ontario?
Absolutely. Yeah. It's no difference to getting a license in Germany, the UK, and all the other countries. We've built the regulated product, we built it for other markets, and Ontario would just go on to that build, which is what we're in the process now with the regulator. So all of the competitors have been there are doing exactly the same. But remember, this is just for one province of Canada's going onto this new build.
Neil,
I was going to say, given the 20+ years of experience, given the 25 licenses, jurisdictions in which we hold licenses, there's not a regulatory regime that we haven't seen. Yeah. Of course, going back to your earlier point, there's a large customer base there. The understanding of the customers has been developed and refined over many years. So yeah, to your question, early April, ready for the regulation and confident of our ability to continue growing in the market.
So in some jurisdictions, operators that have been there kind of gray market before it was regulated, and apologize if gray market's the less endearing term of it. But if, those operators have been treated differently than, operators that may have sat out until the market was regulated. This happened in the United States. There was a big discussion point even in the United States. Is that the case in Canada, or has it been, largely have they engaged on, being approved on a similar timeline and a similar set of criteria to, let's call it operators that are not there in that market?
Canada's been exactly the same as the UK, Germany, Spain, etc. It's been exactly the same. It's literally from unregulated fully into regulated, and that's been the approach. Because for them and for everyone, it's all about the taxes, and it's about having a sustainable business in those markets. There's maybe been one country like Switzerland, I think, was the only one that if you operated before, you couldn't get a license. You had to sit out for a certain period. And that's it, but nowhere else. And maybe Netherlands, they only allowed a few of their original people who had never taken a bet there, the local companies, to go first. But in all the other countries all over the world, that hasn't been the case.
So what is you're sort of uniquely qualified to then answer. What's your take of the depth of what this market could look like? We're all sitting here as outside analysts trying to think about how big Canada could be. You've got, a decade plus of experience operating in the market. So help us understand a little bit more about what we know in terms of, does the market lean, does it look more like a UK market structure in terms of, customer mix and spending? Does it look more like maybe what a US, with some of these, really successful in New Jersey might look like? What can you tell us a little bit about how customers behave within the market based on what you've seen on your own platform?
No, listen, I think the economy of Canada is a large economy. So it's no difference to comparing Ontario to any one of those US states. Importantly, remember, it has casino and sports. So then you can compare it to New Jersey, the UK. Everyone sees how big the UK online market is. So it fits within that, and they are a sophisticated country with lots of people, with mobile penetration, etc. So from that point of view, is for us, it's always been a good market, and we believe in the regulated market even more to come there.
Does the split between Ontario and, let's call it, the broader provinces, does it largely mirror the population? Is it that easy in terms of broader split, or is it different than that?
No, that's different.
So no, in what way? Higher or lower?
Maybe not as high as the population as you thought it should be. Exactly.
Okay, so Ontario making up 65% of the population may not be reflective of your mix exposure across broader Canada. So then what is, what's your expectation for, what happens? It would seem to us that you've got this massive competitive advantage. You have customers. Will you bring those, assuming, all is equal, April 4th, are you going to bring them onto, your legalized platform? You start paying taxes and, it's business as usual. It's business as usual.
That's the whole journey. That's the whole journey. We've done it in so many markets now. That's it. Obviously, Canada is a large market for us, and then you get Ontario. So that is what the whole business is. That is this whole business. It's about that. But also the secret of this business is you also can't overpay for customers over a long period of time. The maths just doesn't work. And I think you'll see that more and more. So I think New York's been quite interesting, is that I think this bonus thing that's gone on and the CPAs, if they want to do that in Ontario, you can do that, but you can't fight like that forever. It's impossible, and it's understanding it. And for us, Ontario is only one part of Canada, but then again, remember, across the globe, we've got lots of markets. So it's all about, we consider every country a market, and everyone has its uniqueness, and that's what our teams have to obsess about in each of these markets. But what I'm saying is, we don't have one size fits all. That's not how it is. There's a Canada team, there's a this team, that team, etc., all over the world, and it's about delivering on those products. And then remember, you split between sports and casino, between Betway and Spin. So we got two sets of teams. So these are defined products, defined returns, and keeping that ecosystem of customers enjoying what they're doing on our network effectively.
Look, your marketing and then your, margin structure are both, it's things that we're not used to seeing. Like, that discipline is not something we're used to seeing at the early stage. So, but you're going to walk in, you're going to be in an environment where you're going to have people competing with this. I think, we call it a J curve or an S curve of, really deep upfront marketing to acquire customers because they're not going to have your advantage. So you're going to be in a competitive environment with them. And then aren't we going to be overlaying a new cost, right? A material amount of tax that you are not paying today. So how do you balance those two with sort of your drive to an efficient, kind of ROI?
Rich, you want to start?
Yes. So I think, Sean, you're right. When a country or a region introduces specific regulation, there's the introduction of local gaming taxes. Correct. That impacts the margin. But on the other side of that, there's also a number, let's say, of positive things for the margin. So if you're looking at lower OPEX, if it's in the form of lower processing fees, as an example, your payment fees will come down when a market is regulated. Your software fees will come down, another example. And that's, effectively working against, say, the negative impact of the increased gaming taxes. At the same time, and Neil referenced it earlier, as these markets regulate, history has shown that they also increase in size. There's a lot more opportunity for marketing, as an example. If it's Facebook, if it's Google, additional opportunities on TV and print, the market will grow. Net, assuming that the tax introduced in the market is reasonable, regulation is a net positive for us, and it's, you may see these changes in the margin, but ultimately they're being netted off with these other items that I mentioned.
Yeah, and in these markets, processing is a key part. If you can't process in certain markets, you might be bringing in 10 people, but only effectively 2 are able to deposit. Now, if you bring in 10 people and 4 are able to deposit, all of a sudden there's an upside there. So it's all of these pieces of the funnel that then make up the difference.
Thank you for exploring that, because this is, I think, new to myself and to a number of people. So with like the 3 minutes we have left, the last piece, but a critical one for the broad part of this conversation is your move into the United States. So I want to turn the direction there. So you've made this acquisition of DGC. That acquisition I do not believe is closed yet, although I think it's expected possibly in the first half of 22 here. So what does that provide to you in terms of market access? And really, what does that? What door does that open up to you? And then what should we expect from Betway or from Super Group in terms of your marketing approach? Are we going to think of being a bit more rational? Are you guys going to come in here and look to acquire customers in a fashion that we've seen, like some of the U.S. operators take to get longer term paybacks? But are you going to try and make a splash, I guess is the way to ask it.
Okay, I'll start, then Neil can jump in. We have announced the DGC acquisition, and the current expectation is that should close in Q3. So not in Q3. We're going through a Super Group the regulatory approvals at the moment. Historically, and I guess still today, DGC holds the license to the exclusive use of the Betway brand in the US. So we've been working with them. They have market access in up to 12 states in the US for running the Betway brand. And actually in Pennsylvania, there's also a market access arrangement for running a casino brand. 6 of those states today are live. 2 of those, New Jersey and Pennsylvania, are both sports betting and gaming, and the other 4 are just sports. And then there's another 6 of those market access arrangements in place. In terms of the marketing, you'll see effectively a combination of the marketing that's been deployed in other parts of the world. So we'll be looking to effectively replicate that strategy in the US once DGC is part of the Super Group, sticking to this returns-driven, ROI-driven marketing, obviously supported and complemented by the global brand spend. Already you'll see the brand associated with a number of leading sports teams across the US. but in effect, it's a combination of the technology, the marketing, the data, and of course, overlaying that with the 20 plus years of experience and packaging that and bringing that into the US. Just one last point, you ask, is it short term? We look at the US as we do every other market. This is not a short term game. We invest for the long term. We say it's a marathon, not a sprint. And that's how we approach each of the states on an individual basis and effectively continue to grow the global footprint across more and more of the states in the US.
Great. Well, look, unfortunately, that's I could go on for another, easily another half an hour with you guys because I'm fascinated by the business and there's a lot of markets. Unfortunately, we just don't have the time to dig into your expertise on. But hopefully, that just means we can table this for a more in-depth conversation and talk down the line. I know you also haven't yet, I believe, reported your kind of final year results, so investors can look out for that. And we look forward to hearing a lot more about you as Canada legalizes and as we see you here in the U.S. in short order. So looking forward to hearing more great things. And thank you for your time this morning.
Thank you.
Thanks for having us.
Thanks.